All right, we're rolling.
Awesome. Thank you so much, Dylan, for your time today.
I'm looking forward to having this discussion.
I know you're so good at all of this. So what better person to have this information conveyed. So thank you again. Misty Padilla here with Dylan Nonaka, the agency team Hawaii brokered by eXp Realty. So Dylan, if you could take the time to share with us, we just came back from an amazing experience with at EXPCon. And of course, at these big events, big announcements are always made. And it just excites me knowing that we're in such a good place, a great place with eXp Realty. So I'll go ahead and let you share, the statistics, if you could, in comparison to what they shared with us at our event. Take the time to go ahead and educate us what it looks like in comparison to all the other, I don't want to say competitors, all the other real estate families.
Options, your options, right?
Thank you.
So, yeah. So, and I guess just to, to be clear, like this discussion is really for the real estate agent that is trying to pick the best model to be in or the best long-term business to be a part of. And for us, that's important because we all have the privilege of being shareholders in the company, right? So when you make your first sale, you get a stock award. When you cap, you get a stock award. If you bring someone into the company, you get a stock award. You can buy stock at a 10% discount. So it really gives us, you don't have to be a franchise owner or a broker owner or a regional owner to get equity in the company that you're working for. We're all going to sell real estate no matter where we're at. And in most cases, most real estate agents don't have the opportunity to become an owner in their company. And so I think we're more sensitive to this, and it makes it's something that we probably pay attention to a little bit more than an agent that just works for a franchise who has no option to ever get any type of ownership or equity in the company. So what we're going to talk about is we saw one of the keynote speakers was this guy, Mike Del Prete, who is an analyst of the real estate industry, and he looks deeply at companies' financial information and their positions financially. And this is just public information that real estate companies who are publicly traded. So not every real estate company is going to be on these charts, but the big ones that are publicly traded that have public financial data are, and then he takes that information and kind of breaks it down and makes it easy to understand. So, right, I think is that a pretty good summary of what we're going to be talking about here? So, okay, so this first slide is the net income loss, and this is just starting right off the top, right? Is a lot of people don't understand that most real estate companies, and in this case, pretty much all of them, except for eXp, are not profitable companies. If you look at their public financial reports that they have to file because they're a publicly traded company, if you look at the companies that are on here, and some of these are not in Hawaii, but they're kind of larger, flat fee, more modern brokerages in the mainland, like United Fathom and Real has a small presence here. Larger companies like Douglas Elliman Anywhere, which is the parent company, it's the holding company of all the big franchise brands. So Coldwell Banker, Century 21, Windermere, Sotheby's, all of those big brands that you see, they're really one company. That's the holding company is called Anywhere. It used to be called Realogy, and they rebranded it recently to Anywhere. And then Compass is the other more modern company that, it's thought of as a modern company, but it's really a legacy business model, right? It's an old-fashioned business model. It's not a modern company. These companies up here, United Fathom and Real, are more cloud-based, modern business model type companies. But if you look at the net income loss, there's only one company that had a net income profit in this year. I mean, it's crazy, right? I mean, like in a year we're coming out of a great real estate market, tons of sales. It's not a huge profit. We're talking like $10 million, $11 million. But if you look at these other companies, these legacy brokerage models, Anywhere lost over $100 million. Compass lost almost $200 million, right? I mean, this is like in 1 year, hundreds of millions of dollars. I mean, it's mind-boggling that's happening. And a lot of times agents don't understand that, hey, I might be at a brokerage that I think has a lot of benefits, but if the brokerage is losing money, the benefits cannot go on forever. Totally. They got to do something. Yeah. I mean, they're either gonna have to make the benefits less, or they're gonna have to take more of the agent commission pool in order to close that gap. So this is the first big just high level number, and then this slide breaks down each by transaction. So if you take the number of transactions versus the amount of profit, of course, EXP is very small profit, right? $130 per transaction. But when you're doing hundreds of thousands of transactions, that's what turns into that $11 million in profit. But if you look at these other companies, like Douglas Elliman is losing nearly $4,000 per transaction that they close. Compass is losing $1,900 per transaction that they close.
Wow.
It's staggering. You look at that from a business model, like how do you fix that, right? I mean, in the long term, when the market's down, things are slower, there's way less transactions, it's going to be an extremely difficult problem to solve, a financial problem to solve. So yeah, interesting stuff. So this is the per transaction numbers. This slide was a shocker to me, and it really illustrates the unfair competitive advantage that, again, a lot of times, this is inside baseball from a real estate industry standpoint, but operating costs is what drives profit or loss, right? It's how much money are you spending on a daily basis to keep your business open. Right. And these legacy models that have a lot of brick and mortar, they have a lot of staff, they also are franchise type models, right? So the issue with that is it's not scalable, because every time you open a new office, it's an independently owned and operated office. So it may look like a national brand, but it's actually an independent office that has to have its own managing broker, its own administrative support, its own tech person, somebody doing the books, somebody filing the taxes, somebody answering the phone at the front desk. So every time you open a brick and mortar office, you have to take on an enormous amount of cost in order to do that. And the flip side to that is the cloud-based model, right? So with EXP, it's one large national company. There are no franchises. There are no regions. There's 2,000 employees that work for the company, corporate company, but they work for all of us. So when we hire a new agent, I don't have to think about, okay, do we have to hire a new administrative support person or a new bookkeeper or somebody to process their checks? Like, those people all live in the cloud because we live in 2023, and they work from their computer and they support everybody. So it's a very easily scalable model. And what that turns into is just like this crazy discrepancy in operating costs, right? So if you look at the operating expenses per transaction, so this isn't speaking to loss or gain, because this is like the pure cost, because some of it is covered by the commission split that the brokerage keeps, but then they're losing money on the rest, because if it's a let's just call it a $20,000 commission, and they're giving $15,000 of that, 75% of that to the agent, and the company keeps $5,000, they still got to come up with another $3,000 in order to cover the operating costs, right? So what that means, and what that tells us as an agent is if we're getting 75% commission now, that's going to have to go down to 70 or 65 in order for them to close this gap and be able to cover their operating costs per transaction. So not only is the operating cost crazy, like, Realogy is almost $8,000, Redfin it's $8,500, Compass it's $8,800, Douglas Elliman it's $9,700. What's insane is that EXP it's like less than $700. So not only is it like a little bit more efficient, it's like 10 times more efficient, which from a business operating standpoint, if two people own a hamburger stand and it costs me $1 to sell a hamburger and I'm selling it for $10, and it costs you $11 to sell a hamburger and you're selling it for $10, like the gap to catch up and become even is like so far. The gap is huge. It's going to be extremely hard for these companies to catch up because there's just so much built-in fixed cost that you might be able to cut 10% of your expenses, but are you going to be able to cut 90% of your expenses? And that's basically what this graph is showing us, right? Is that we are 9 times, 10 times more efficient from an operating cost standpoint than the other options, not our competitors, or the other options that a agent has to choose from. So,
right, we're like off the chart.
It's not even close, right? I mean, it's not even close. So,
yeah,
and this is why when people say like, oh, how do you have such a low cap, and how do you guys get stock, and how do you have all this support? Like, it cannot be real. This is exactly the reason why, is because the operating costs are so low that you can provide way more agent benefits, and it doesn't break the bank, because the pure operating cost for the company to do business is so much more efficient because of the cloud-based model, because of the nationally based model. We don't have all those inefficiencies of the franchise independent offices, which is, you know, the legacy way that real estate has been done for basically up until EXP was founded. We have some copycat models now that have cloud-based models that have started. None of them have seen the type of growth or significance in the market. They may in the future, but up until this point, you know, it's the only one that really has gotten any traction. So
right. No, that is so amazing. And again, it just goes to show, you know, the strategy behind our business model. You know, it's proven to work, you know, in many different levels of this. I mean, can't even speak into it enough.
yeah. So we got a couple more slides here. So I will go through these ones kind of quick, but this one is agent count. So this is interesting where this is pure agent count, right? Number, not a percentage, but pure agent count. Like Real is a small company. I think they just hit 10,000 agents. You know, we have in comparison 90,000 agents. So they are growing from a pure agent count faster. Like they brought on in the first quarter about 1,500 agents. We were just under 1,000. But if you look at all the rest of the companies, I mean, a little bit of growth, but all of the companies that actually have growth are the cloud-based, more modern business models, right? Agents are voting with their feet. They're leaving the legacy brokerage model and going to the cloud-based business model. Compass had a little tiny amount of growth. I mean, less than 100 agents, so really statistically not that significant. But if you look at everybody else, the Remaxes, the Redfins, the Anywheres, right, the legacy brands, they are net losing agents. And this just kind of illustrates agents are voting with their feet, right? If they see that they're not getting the benefits or the compensation that makes sense to them, they're going to go someplace else that does. And that's what this shows.
Awesome.
And then this is a big one, right? If it comes down to just dollars and cents, and do agents care about how much they get paid? We always have this conversation where we kind of joke about it. Like, if everybody knew the difference, if they just ran the numbers, it would be a no-brainer where they're at. Because there's no matter what stage of your career you're in, if you're a brand new agent, you'll never get the kind of compensation you would get here. And if you're a very successful higher end agent, the numbers are astronomical, like in the six figures in terms of the difference in the commission splits based on our cap. So this just purely shows from each company how much money is being paid out to the agents versus how much money is kept by the corporation. And so EXP is not number one, right? I mean, we're at 91%. There are some companies that pay out a higher amount. These companies like United and Fathom, flat fee brokerages that basically provide nothing to the agents, right? You basically just a brokerage with some administrative support that handles your transactions and your payment processing, because you have to legally be part of a brokerage. But not a lot of training, not a lot of tech support. I mean, so you can kind of do your research into their business model. But when you do that, you can pay out 96% because you're not really providing anything from a staffing standpoint to the agents. So we're not number one in terms of amount of money being paid out, but it's still 91%, right? The company is only keeping 9% of the overall commissions that are collected. Where if you look at the legacy brands, the Compass, Anywheres, and Douglas Ellimans, I mean, you're talking 80%, even less. But again, this is in a current market where they're losing $2,000+ per transaction, right? $200 million a year. This number has to change. The only way the math works here is to take more money from agents in order to close the financial gap. So that's the era that we're in right now. Is over the next 12, 18 months, it's somewhat going to be a reckoning. A reckoning is going to have to come where these companies who can no longer raise private capital because the economy is down and interest rates are high. So you're not going to gamble on a startup company or a company that's trying to grow. You're going to put your money in a safe investment. If you can get 12% in a safe investment, you're not going to try and gamble on a company where they're raising venture capital and stuff. And so the days of that happening, where that's what fueled the fire for these guys for a long time, was their ability to raise money. Those days are over. And so now there's 30% less transactions this year than there was last year. The only way to grow revenue is to take more from the agents, and agents are going to have to make a decision on, if they're okay with that or not.
Right. And who's realistically, going to be willing to give that up, especially when markets are like this.
That's a big consideration I've been telling agents lately too, is, okay, if the market's down 30%, even if you did the same amount of work as you did last year, if you're going to make 30% less this year, now you can look at, okay, what are my expenses? And in most cases, an agent's largest expense is their broker, right? They don't look at they look at their expenses after their broker takes a cut, right? And they look at then whatever their cut was, then they have their marketing expenses and their all the rest of the things that they spend money on. But really, if you look at the 100% of the commission and take that into account, that's really where you got to see what your expenses actually are,
Right.
because you might be able to get a 30% raise just being in a better business model and not paying your broker so much money. And then you don't even have to do any extra work, right? You can make the same amount of money as you made last year because you're just paying less out off the top than you were before. So all stuff to consider. So
no, that's great. That's important information.
And of course, if anybody is interested or this is at all fascinating, you can always reach out to Misty or I. We're happy to sit down with you, break stuff down. You do have to know what your current expenses were so we can do an apples to apples comparison. But with us, it's very straightforward, right? Like there is no special deals. Like we know exactly what the calculation is, regardless of where you're at, because we don't negotiate commissions. Everybody gets the same opportunity to thrive in this business model, whether you're brand new off the street or you're doing $100 million a year. That's the cool thing, is there's no having to wonder who's getting a special deal or special treatment, because it's a very transparent, very even across the board compensation model.
That's so awesome. Was that the last slide that you were sharing with us?
Yes. So any questions?
No, that's great. You pretty much answered all of it. Many people always continue to ask, what is it? What's going on? What is it with EXP and your team? And just like you say, is numbers don't lie, and you put it straight out there. So thank you so much for taking the time and sharing that with us.
And one of the biggest takeaways here is, I always think about, we talked about equity in the beginning and what a great benefit that is to become an owner, right? But regardless, if you're a brand new agent, you make your first sale, you automatically get stock awards, and now you become an owner in the company. That only is valuable if the company actually survives and makes money, right? So that's very important. People are like, oh, is the stock even worth anything? Well, it is, and it's done well, right? I mean, it's done. When you and I joined almost 5 years ago, the stock was like $4 to $6, right? Today it's trading like 15. It's gone up to, it was 20 earlier this year. So stocks go up and down totally, right? But we're literally, 400%. Like our first $200 stock award when you and I joined and we got our first sale is worth $800 today, right? To $1,000 today. And so if that continues, then, we're going to be okay in the future. But the best way, and we're not stock analysts here, but the best way, kind of common sense, normal guy way to look at it is, if your company is making money over the course of time, the value will go up. Right? It's very simple to think about, where if your company is not making money, then at some point your stock is going to go down because people are going to stop investing in your company. So that's an important point to all of this, is the reason I care, the reason you care, the reason we care is because we are owners, and we want to make sure, if we're going to be investing our time and effort and money into a company that we are an owner in, we want to make sure that it actually makes money and it's profitable and it's efficient and their operating costs aren't through the roof, and the executives don't get paid a crazy amount and not wasting money on office space that we don't need and stuff like that. So that's the big thing, is at the end of the day, who is going to be a profitable company into the future? And that's really one thing you really should, if you're going to spend your life selling real estate, is, do you want to be part of something that long run is going to be profitable, that you have some ownership in, or you just going to, when you're done, hang it up and get a certificate maybe and a luncheon and say, congratulations. Yeah. So
right. No, that's so huge. Thank you so much. And just as you mentioned earlier, if anyone has any questions and wants Dylan to run numbers, come talk story with us. We're happy to have that conversation with you. Obviously, yes, we just love, and treasure our team and our brokerage, and we're super, super grateful. And, we're always here, willing and ready to learn and embrace all the changes that come with it. I think that's the beauty of it, is we're going to just keep getting educated. And whenever there's changes in the market, the company also evolves. We don't just stay the same, consistently all the way through. We're always evolving with the times. And I just love that. There's no other way that we can grow better.
Thanks for taking the time and making me talk about this. This is fun.
Thank you so much. We appreciate you.
Okay. Let us know, anybody. If you guys know how to get a hold of us if you have any questions, and appreciate you, Misty.
Thank you. Take care. Likewise. Aloha.